Hello, this is Victor Santana for Stock Hunters on August 24th, Sunday. Let's see what has happened here. We're looking at the daily chart of the Dow, represented by the ETF stock ticker symbol DIA. And here you can see the last 5 days we had a pretty parabolic move up from this dip down here. Okay, and according from my last video here, we're looking for an entry here, and sure enough we got the signal, got triggered in, and it closed up higher, and the following day afterwards we got triggered out. That is what it is so important to plan your exits before you even enter a trade. This way we know what to do when things do not work out for you. Uh, it keeps you from deciding, well, I'll wait for the next ride up, and you go up here, you're getting the red candle, you're getting excited, say, all right, this is where it's going to pull up, but sure enough, it continued on. So it eliminates the emotions out of it, you might say, okay? So in this case, glad you did. You know, we had a 0.5% risk on the DIA, or 1.5 if you were using the leveraged ETFs, which I use, and that's how you survive in the long term on these games. You take short losses and let your winners run. Okay, so let's go ahead and evaluate here what could happen. First, we got to look at what the trend is. And if you're looking at the trend line here, and this is the 100, the 50, and then the 20. And what I'm seeing is the 20 is between the 50 and 100. Okay, so this is starting to look neutral. Even though we had this parabolic move up, it's still something just to keep in the back of your mind, because what we want to see is this action back here when all three lines were lined up correctly, and we would look for entries based on these dips back down here on the CCI. Okay, so now we did a parabolic move, and now we're seeing a small candle pattern up here. CCI is now dipping below. Now that does not necessarily mean it is a sell signal. We got to get confirmation, and there's two ways to play this. One way is which I typically use. Let me just set up here my colors here. Okay, is once we start floating up in this area here, I look for a break of the previous candle. In this case, these two are pretty close, so what I would do is make this my breakdown right here to enter. Let me make that into a green candle. All right, and at the same time, if I'm triggered in, we're going to make this our exit. See, so now we have both planned out. Our entry, and if that happens, here's our exit if we're wrong. Now the target, okay, will be down in this area. See, we have a small gap here. Let me pull this up here. Get these going. Let's see if this is the right color. Yep. See, we have a small gap here. So there's a good probability of coming down in this zone here, which would be roughly, if we could calculate this, let's say 1%, pretty close to 1%. So on the ETFs, that's a 3% small. Okay, got to be quick and nimble. Again, this is kind of a counter move because the trend is up for the moment. Even though it's kind of neutral, we're going against it, so we're giving the benefits to the bulls. All right, if this is something you're not interested in, then just wait until the CCI is back down in this zone down here, and we could then look for entries maybe for the next move up. So we'll have to keep an eye on all of that. on this chart here. So let's go ahead and move on to the next chart. And here we're looking at the SPY daily chart, and it's pretty much giving us the same story here. It did make it all the way up to the highs up in this area. As you can see, we are getting a spinning top formation, and if you look at the previous candle here, the spinning top is within this body of this candle, which then we got what we call a harami, a bearish one because it's red. So what we're going to do is take a look at which way it trades the next day, either here or up here, because what we got going here is we have a CCI coming out of the overbought area. So we're looking for a move back down to the negative 100 for another target here. So what we're going to do now is, let me just get my lines here with the correct color, makes it easier to identify. And look for an entry right here to get in, to go short. By going short, we're looking at the SPXU, and our exit, and let me switch over to the red, make it easy to identify. This is going to be our exit right here. So now we got it defined. All right, so here's our risk from here to here, and our target. Okay, looking down here, pretty much we do not have any gaps here that I can notice at the moment. Well, you could maybe say it's this one here because it closed down here, and the next day it gapped up and started there. So that is a fairly reasonable assumption that this could be our target right there. So we're going to put that down here as our first target, potential target, which happens to be our 50-day right in there. So I like the odds. See, your risk and your reward. So we're going to keep an eye on this, see if we get triggered in based on this. CCI is up, and also looking at the bigger trend, you could see the 100, which is the red, the blue line being the 50, and the green line being the 20. So the 20 is also between the two moving averages here. It's kind of getting a little neutralized, so we'll see how that plays out. But for the short term, we're looking for a move back down here, so we'll see how that works out. So now let's move to the next chart. Okay, now here we're looking at the daily chart of the triple Qs, QQQs, and let's look at the trend first. The 100, the 50, and the 20. Now in this one here, you could see everything's lined up correctly compared to the other two, the Dow and the S&P, where the 20-day was between the 100 and 50. So this one is still in a good strong bull market, and as you can see, it has made higher highs way up here. Now short term, looking at the CCI, it's telling us we're seeing some divergence, negative divergence, bearish divergence, whatever you want to call it, divergence, the downward divergence. And the candles are also turning to little spinning top small body candles, so meaning that there's less and less buyers up in this range. So we could play it this way. We could look for an entry, because now that it's coming out of an oversold or overbought, excuse me, we could put an entry right there. This is our entry right in this area. A break below this would trigger us in, and now let's look for our exits, which you probably know by now will be right above this one. So here again, small risk. What kind of rewards can we expect? Well, this is what I'm seeing down here. So let's pull this guy up here. Let's switch it over so it'd be easy to see. Here we have a gap right down in here that I'm seeing. That could be a potential. And this, just like the other two, could be right at the zone where the 50 is. So that's where we could be heading to on this case here. So let's watch the market and see what it tells us to do, and look for that move back down. Even when it gets down to here in this area, we could then look for another move back up. All right, so let's look at the Russells real quick on the next one and evaluate that one. Okay, in this chart here, we're looking at the Russell's 2000 IWM, and looking at the trend first, you could see we have the 100-day moving average in red, and in this case here, you could actually see the 200 as well. Okay, and then here's your 50. So you do have the 200, 150, but look at where the 20 is. It's way under here. Okay, so it's under the 20-day moving average is under the 150, which is bearish, at least for the moment. And but as all these three lines here are coming closer together, it's going to form a lot of support here. So what am I seeing here? Well, I'm seeing a move up, consolidation, could be getting ready for another move upwards. So what we've got to do is look for a pullback, look for support at this zone, and hopefully the CCI, what we're seeing here is now between the 100 and negative 100. We would love to see at least a dip down to negative 100 to look to go long. So that is, I think, the risk. If we play it the normal way, as you could see here in this area here, you could almost argue you might have a light bearish divergence, because the peak here, which is this candle here, compared to this peak here, which is could be this candle here, I believe, or this one, is higher. So the price is higher, but the peaks are level. Now in this case here, because they're level, and this is such a short-term trade for 5 days, it doesn't play out as well as if you would have looked at divergence of like 21 days. So in this case here, it has little meaning, but just something to keep an eye on. And well, if you would have played it that way, you would go short on this candle here. Once a breakdown, which did the next day, but now it's trading sideways here. So I could drop down here, but we want to trade with the trend. So we see a lot of support here, so we're looking for a bounce right in this zone here. So let me just highlight that there so keep an eye on it. Let me just switch over to these settings. There we go. So this is the area I'm looking for, somewhere in this area right there. So if we can get down here, then get the bounce up, great. So let's see if we can get the CCI down to negative 100 before going long. Okay, so that's basically it in a simple way, and just keep an eye on the markets and see how it plays out. Until the next time, take care and trade well. Bye.